What's up, homies and homettes? Welcome back to the channel. Today we're going to be reacting to a video from CNBC titled How the IPO Market Went from Boom to Bust. Now, I've not seen this video, guys. I just wanted to check it out and I'll give you guys my opinion. So make sure you drop a like, subscribe to the channel, and let's get right into it.
There's the NASDAQ with Bumble celebrating its IPO. At the big board, it's a Korean e-commerce giant Coupang, as David said, celebrating its IPO.
Rivian, electric vehicle maker, of course, celebrating its IPO, ringing the bell.
All right, so it looks like they're going over different IPOs that happened last year. Coupang, Bumble, all great companies, guys.
The IPO market has all but shut down in 2022.
238 days without a tech IPO above $50 million as of today.
We're actually framing 2022 as the year in which the IPO market went from boom to bust.
So no good tech IPO. I don't know about that. As you guys know, we had HKD, baby. Maybe they're talking about just American companies, right? But we did have some good tech companies like HKD IPO in the last couple months.
Investors are not looking to invest in the riskiest asset class right now. They are de-risking their portfolios.
It's kind of unrealistic to assume that after last.
See, and I hate when people put together IPOs with like SPACs and with all this ARK invest companies and all that, the tech companies. IPOs involves those companies, but even more than that. It's not only just tech companies or high risk companies, okay? You have other companies that IPO that are in different sectors of the market. So housing, finance, and all that. So it's not just high risk technology companies that IPO. So I hate it when they get grouped together into the risky assets, you know, like cryptocurrency or like SPACs or whatever. It's not like that.
Last year's record-setting pace, things would continue at that same pace, but the collapse has been remarkable.
And the single driving factor, the most important one in terms of whether it's an active IPO year or not, is the strength of the overall stock market. When stocks are going up, when the indexes are making new records, it means that the public's excited about stocks. Valuations are going up. That means private companies want to capture those higher valuations by selling stock to the public. All those things reinforce one another on the way up. On the way down, it's quite the opposite.
Again, they assuming that all IPOs are risky companies that are coming out that either not profitable and they are risky assets. And it's not like that. You can't group all IPOs into that category. A lot of the IPOs I cover on this channel, yes, they're non-profitable and there's a good reason to go IPO. But some of them are actually making money. Some of the companies that IPO, like Lightchain, HKD, and all the other ones that I cover in this channel were making money. Even Bumble was making money. So yeah, you can't just group all IPOs into the risky assets that people only buy whenever the economy is doing well. That's a no-go.
We're roughly 9 months in to 2022. It's been the slowest start in over 13 years around IPOs. We've got just over 70 traditional IPOs completed, 70 SPAC IPOs, a combined $16 billion in proceeds raised. So a really remarkable slowdown in the markets.
So she's talking about only 70 IPOs in the last 6 months. Okay, that is a big drop from 400, right, last year, but it's still a pretty good number. We're talking about 70 companies going public in the last 6 months. That's no small number. I mean, if you're going to compare it to 2020 and 2021, yes, but it's not a small number by all means. 70 companies, guys, 70.
The Fed has become aggressive in raising interest rates, one of the most aggressive rate hiking campaigns in generations.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses.
And it also hit the stock market at a time when it was very concentrated in large tech and growth companies, where you have a lot of high expectations for future earnings.
The companies that we're seeing go public so far in 22, the numbers are still largely driven off the sectors that we would expect, you know, tech and life science.
Okay, right here, you can see healthcare, 41%. So that's got nothing to do with tech. Okay, high technology, only 18%. Consumer products, 8%. Industrial, energy, and financial, 6%. So there's a big diversified group of IPOs. It's not just technology companies. So some of the companies that are on healthcare and other services like consumer products and services and all that, industrials and all that, these are good companies that are actually making money. So not every single IPO is high risk. That's all I'm trying to say.
Are really still continuing to drive the volume. What we're seeing, though, is an increase in just the microcap IPOs. So microcap being, proceeds raised of less than 50 million. 80% of the IPOs so far to date have really been microcap IPOs.
While IPOs raised a record amount.
And what's wrong with that? Just a company doesn't have to be valued at, $1 billion or $10 billion or whatever in order to be a good company. It could be valued as $50 million, or less. So again, just a moot point. It has nothing to do with valuations. People, they do their research. They understand that a company doesn't have to be $1 billion company or a $10 billion company in order to be a good company to provide good services to the economy. So.
Amount in 2021, so did the private markets, and tech unicorns especially are sitting on massive war chests, and that's allowed them to just wait out the storm in 2022.
An IPO is a company's first and probably best opportunity to assemble a following on Wall Street, to assemble a shareholder base, to kind of tell your story in a very focused way. And then if it performs well, clearly you have somewhat of the loyalties of the street. You can pay your employees more, you can attract more employees. So it does feed general kind of corporate objectives aside from just getting the money from investors.
Companies that IPO'd in 2021, their performance has not been well.
If you look at the Renaissance Ipo ETF,
and this is something that I cover on my channel all the time. I show you this Renaissance IPO ETF all the time, and I show you guys that IPOs are down. Overall, down 20, 40, 50%, which is a great time to buy into these companies. Once they rebound, in the future, then you'll make out very, very good. But to say that they are, went from boom to bust, you also got to remember people had money during the stimulus checks, right? People had money to invest into these new companies, to put into the stock market. They were thinking about, hey, what's the next Google? What's the next Apple and all that? So they were pumping money into these new companies, trying to make money, trying to get rich real quick, right? Well, now they don't have that kind of money to be spending around and all that, especially with inflation, things are more expensive. So people are holding on to their money. They're spending less. So that is contributing to this, but it doesn't mean that IPOs are over, or that there are no good IPOs coming out. I disagree with that.
That's underperformed broader stock market indices year to date. Looking at last year's IPO class, 2021, only 1 in 6 IPOs are now trading above issue.
Investors are really risk adverse at this moment, and that's what's really impacting the lack of activity that we're seeing. They're looking for companies that are focused more on growth and profitability, as opposed to the growth at all costs that we were seeing in 2021.
The tech boom last year was largely driven by the very high valuations that public and private markets were giving to high growth companies, where the price to sales ratio for a lot of these rapidly growing young companies was much higher than historical norms. And a lot of companies took the opportunity to tap public markets.
What you have here is a combination of a lot of money being flooded into the stock market and new investors that should have not been investing in these companies that are not making any profit or that are not promising or delivering on their EPS. So it's just it's a bad combination, what we saw last year. Now it looks like they're going to go into SPACs. If you want to learn more about SPACs, you can check out my boy's J Mac Investing channel in the description. He know all about SPACs. He's always interviewing CEOs and stuff like that. I'm not an expert in SPACs, but I can tell you that some of them have been pretty good, and I do invest in some SPACs. If you want to check out what I'm investing in, make sure you go down in the description, join my Patreon, and you can see all my IPO portfolio, my SPAC portfolio, and all that good stuff. So let's see what they say about SPACs.
SPACs are special purpose acquisition companies which are created by a sponsor where the sponsor then takes a cut of the action and then takes the SPAC public and raises cash in that IPO. But the cash is put in an escrow account, in a trust fund, and the SPAC sponsor then has a period of time, typically 18 months or 2 years, in which to come up with a merger with an operating company and a private operating company. And in the process, if the merger occurs, that private operating company then becomes a publicly traded operating company.
Now, SPACs.
And if they don't merge in the allotted amount of time, the money is returned to the investors. And that's one good thing about SPACs.
Have been a pretty terrible performer as a group. In part, that's just because people lost interest and they didn't want to wait around for a deal to happen. But also, it's by definition, a lot of these deals that were going to be done were from companies that themselves may not have been the best candidates to just go public on their own.
SPACs have actually been around since the mid-2000s, but they really did explode in popularity in 2020. There were a few high-profile successes, specifically Draftkings and Virgin Galactic.
And I bet you if you look at the prices for Draftkings, it's still doing pretty good. Now, I don't know much about Virgin Galactic. I know it goes up and down, but I know Draftkings was doing very well there for a while, and a lot of people made a lot of money.
Beyond that, I think people viewed them as sort of an equalizer, especially retail traders, who saw that they could buy the stock for $10, the same as the institutional investors.
If you're doing a formal IPO, you can't actually issue projections saying how your earnings are going to grow or your profits are going to grow in a very specific way. Whereas for SPACs, it was a loophole because part of a merger, you can do that. And so this idea was you could just tell a very, very aggressive story, and some people bought into it. And now that's been cooled a little bit.
There are hundreds and hundreds of SPACs that are already public that are looking for a merger partner. So it makes no sense for a SPAC to be going public now rather than wait for a year until all this competition goes away.
Exactly, and you can't blame them for that, right? That's just being smart, you know? Why you want to merge when people are afraid to buy into new companies? You know what I'm saying? So that's smart. There's a couple of SPACs that I'm holding in my portfolio that haven't merged yet, but I know that they will eventually, and if they do merge, it's good because I get a great company, right, at a cheap price, and if they don't merge, I get my money back. So what's the problem with that? I don't see any problem with that.
We've definitely seen organizations that were really gearing up, in 21, targeting 22, anticipating that continued momentum, and hit the pause button. That interest of going public is still there. It's how they're using this time to be ready.
I would expect that a low level of activity is going to be continuing at least for a while. But if the stock market starts going back up again, then we'll see a rebound in IPO activity, although probably not to the levels of 2021.
My guess.
And I agree with that. Everyone, wants to invest whenever there's a bull market. Everyone sees the prices going up, stock market going up, and everybody wants to invest. Whenever we're in a bear market, people don't want to invest. They're skeptical about the stock market, but that's just overall. A sentiment in the entire stock market. It has nothing to do with just SPACs or just IPOs. So if you could look at this last week, if you look at the Finviz heat map, you got Google, Amazon. These are proven companies, guys, throughout recessions, throughout depressions and all that. Proven companies down 7-8%. It's unheard of.
This is the initial wave of IPOs, if and when they come back, are going to be some combination of companies with growing cash flows already with earnings. That might be in things like energy.
The remainder of 22 could be a challenge, and I see companies really looking ahead to the first half of 23 in hopes that, we're going to have some stabilization around, volatility, market volatility, as well as valuations.
So overall, pretty good video, guys. It touched on a lot of what's going on in the stock market, and you got to think about it's just the macroeconomic situation, what's happening in Ukraine, and with inflation and all that. All that is going to affect the buying power of the people, investing in the stock market. So the sentiment is low now. Everyone is skeptic, and that's okay. We haven't we haven't had that many IPOs this year, only like 70 plus, and that's okay. That's fine. But eventually, when the bull market starts to run back up and inflation goes down, and we're already seeing the oil prices go down and all that, and people start having a little bit more discretionary cash available, they're gonna start looking at these new companies one more time, to invest in and trying to get that big next that next Google, that next Apple, I don't know, the next Amazon, I'm surprised that Coupang is down that much. I'm surprised that all these companies are down that much. If you want to see a video on all the IPOs that are on sale right now, let me know in the comments below, and I will make a video talking about that. But today, I just wanted to jump on here real quick and share that video with you guys. I hope you enjoyed it, guys. If you did, make sure you drop a like, subscribe to the channel. But more important than that, guys, make sure you take care of yourselves. And I'll see you soon.
I bring up the pain, Rickosaurus the main. I make the market rain like acid rain. An investing channel you ever known, ya. I think you'll go your house, your money, leave you broke, son.